It's Justin here with the Real Keeper Home Team, and welcome back to our channel, Everything Jax Real Estate, where we talk everything Jax Real Estate. In today's video, we're going to be doing a market update report for the Jacksonville Beaches and the Jacksonville Southside area for December of 2023. Now, if you're not familiar with our videos, with our market updates, what we do is we dive into the amount of homes that hit the market in December, amount of homes that went under contract, amount of homes that also sold, what the price points were for each one of those. Also, we go over the days on market and the price trends that we're seeing in the area for the last 6 months and even the last month. Also, at the end of the video, we will dive into some of our thoughts on what we look to expect happen in 2024. So you get to see our crystal ball as far as what we think will happen based off of who we've been speaking with and all the data that we've been looking at. Now, before we get into this video, all we ask is if you can like it, subscribe to our channel, and ring the bell so you get notified to post more videos like this in the future. That would help us build our channel even further and help us provide more content like this to you, our audience, as we go into 2024. All right, now let's go ahead and check out the data. So as we start, the first thing we're going to look at is we want to look at the amount of homes that hit the market, amount of homes that were on the market, as well as the amount of homes that went under contract in December. And what we're going to see is that we had 410 homes on the market in the area in December. And of those 410, 111 of them went under contract. This left us a pending ratio of roughly 27%. Now this pending ratio, it's important because it gives you an idea of how much demand is going on in an area. And sometimes it does highlight the fact that, for instance, when you have a 27% pending ratio, it means that you have roughly almost 3 out of 4 homes on the market still without contracts. And only one of those 4 are going under contract for the specific month. This is a reduction from November. And so what it tends to tell us is that, 1, the homes that are on the market are just not going under contract. And 2, the homes that are coming on the market could be, but there also might be less of them. It also tells us that demand is not as high currently in this area as we've seen in previous months. Now that is pretty typical because for this time of year here in Jacksonville, it tends to be a little bit slower, not just for buyers, but also for sellers. So you can start to see a little bit less demand and a little bit less supply due to the holiday season and due to the fact that, at least here in Jacksonville, we do get some of our colder months during this time of year. And people don't always want to sell due to it. Now, this ratio is still described as, inventory levels is still described as mildly active. That is a continuing trend throughout all of 2023, not just specifically this month. Now you may ask yourself, okay, how many pendings do we have? What price point had the most pendings? Well, that's a great question. And the price point that had the most pendings may surprise you. And that was actually the $600,000 to $800,000 price point had the most pending homes for the area. Now the next question could be, what price point had the most amount of homes actually on the market? And that's another good question. Spoiler alert, if you've seen previous videos, it's actually a continuation from previous month's videos. And that was actually the $400,000 to $600,000 price point had the most amount of homes on the market for December. Now the median list price for the area, $630,000. So even though the most homes in the market were between $400,000 and $600,000, the median list price for the area was above that at $630,000. Something to keep in mind as we go throughout the rest of this video. Next up we're going to look at is this graph. This graph kind of gives you a breakdown of how many homes are actually on the market in relation to how many homes are under contract. And what you're going to see is homes that are under $1 million, there is quite a bit more inventory compared to what's under contract. And so what that tells us is that means that there's more options for you as a buyer compared to if you're in the $1 to $2 million price point. You may not have a lot of options. The majority of the homes in that price point may actually be under contract already. So with having a little more competition, you may not be able to negotiate as much as you would ideally want to. Next, we're going to look at the amount of homes that have sold in the last 6 months. So this is one of the trends that we like to follow, and this is a big one for us because when we get to this time of year, you start to lose some of that summer data. You start to gain some of that more fall and winter data, which, like I said, tends to be a little bit slower. And it's shown here at us having only 748 homes that sold in the last 6 months. So this is actually a reduction compared to previous months. It's a pretty good size reduction. And so overall, it's something that we will continue to monitor because realistically, as we go into the first quarter of 2024, we'll probably see that number kind of stay the same until we get to about April or May, then you'll probably start seeing an increase in those numbers as we get to more busier times of the year. Now for the homes that did sell, the median sale price was $544,000. That's actually, you could think it's quite lower when you see $630,000 for the average list price. And do keep that in mind because those numbers, they tell a story. But what kind of story do they tell? Well, they tell us that prices have actually come up quite a bit in the area. But the real question is, especially in the last 30 days, is are those prices that they're being listed for anywhere close to what they're selling for? When you look at the last 6 months, you'd say, no way. But what about in the last month? Stay tuned to find out. Now before that though, we are going to look at the amount of homes that failed to sell. What we see is there was 218 homes that failed to sell in this area for December. Now when a home fails to sell, it can be for many different reasons. Sometimes it can be to do with a seller changing their mind on wanting to actually sell their house. It could be that the seller may not have liked the realtor they were working with or felt like the realtor they were working with didn't do a proper job for them to sell their house. It could mean many different things. Maybe they had a job relocation and the relocation no longer occurred. But what it does tell us too is it's a reduction in homes that failed to sell compared to November. And the big story with that is we tend to see less homes fail to sell this time of year because less homes hit the market because it is a slower time of the year. Next up, we are going to now look at the days on market and median price points for the area as it relates to homes that have sold and obviously homes that are still on the market as well. And what we're going to see here is that for the homes that are still on the market, those average days on market, they're getting up there. There's 69 days on the market currently. And so that's an uptick from last month. And realistically, it's very common because of the fact that with it being a slower time of the year, there's less buyers out there buying homes. And so therefore the homes that are still on the market are going to stay a little bit longer because there's just less people looking for them. Next up we're going to look at is, again, we look further at that median days on market for the last 6 months for homes that did sell. Now we know the price was $544,000, but the median days on market was 27 days on market. So the majority of the homes that are selling relatively quickly, and that's why they're obviously selling 27 days versus the ones that are still listed are more than double that. So a big difference there, and realistically that does tell a little bit of a story that in essence, if your home is priced properly, if the condition's good, the location obviously speaks for itself, you probably will sell relatively quickly. If you're not one of those things, you may sit a little bit longer because this time of year does kind of dictate that due to seasonality trends. Next, we're going to look at the homes that sold in the last 30 days. Now, you may think, because it's a slower time of the year, the homes that are selling probably are selling for a little bit less, right? Maybe even more days on market. Well, I can tell you is that's not the case. For the last 30 days, the average or the median sold price was actually $610,000. That's roughly $60,000 more than when you look at the last 6 months data. It's only $20,000 less than the homes being listed currently. So what that tells us is that even though it's a slower time, the homes that are still priced well, have the right condition, obviously location speaks for itself, are still selling quickly. Especially being December, we do see that a lot because people want to get them for homestead reasons, and they're also selling for a much higher number than they were just 6 months ago, even during part of the summertime. Part of that is because we have seen rates come down some, whereas at the end of October, rates were somewhere in the mid to high sevens. Talking with lenders, now talking with lenders, they're somewhere in the mid to high sixes, so a full percentage point does make a big difference. And it will be something to monitor as we go into 2024 because if rates do start to come back down even further, we could see both those numbers change, with days on market going down further and price going up further. So definitely something to stay tuned for on our future videos. Now, next thing we're going to look at is the median list to sales ratio. Now this is going to tell us what percentage a seller is getting for their home based off what they're listing it for. And what we see is a 99% list to sales ratio. So what that tells us is that a seller is getting roughly 99% of what they have their home listed for from a buyer. It just goes to show that even though it's a slower time of the year, even though there's less inventory, even though a lot of the homes that are sitting for quite a while, that the ones that are still selling close to what the sellers want for them. Lastly, we're going to look at the absorption rate. The absorption rate measures the amount of homes on the market, and it tells you how many months of inventory those homes that are on the market can support if no new homes hit the market. And what we see here is we have 2.4 months of inventory. 2.4 months of inventory means that we would be out of homes to sell in the Beaches and Southside area in roughly 75 days if no new homes hit the market. If on December 31st, no one ever sells their house again other than the ones who are on the market, we have 75 days roughly before we'd be out of those homes and nothing would be available. So that's pretty substantial. What that means is it's still a seller's market, but it is a higher rate than we've seen in previous months in 2023. And so it does mean that for the homes that are available, there is a little bit more options for you as a buyer. Next, we're gonna look at the graph, or rather table down here below. And I like to end with this because it gives you a good idea of just how much homes are available for each individual price point when you're looking at the absorption rate. What you're gonna see is for any homes under $1 million, and really any homes under $2 million, you see a lot of reds and some oranges in there. So what that tells us is that there's not a lot of homes available, and therefore the demand is very high at those price points. So if you're looking to buy a home anywhere under $2 million really in the Beaches and Southside area, you could have a lot of competition. So you may not be able to negotiate as well as you could if you were at a higher price point, like 2 million plus. Because as you see with the 2 million plus price point, they're all 6 months, 9 months, 12 months, 9 months, outlier with 4.5 months. So what that tells us is that if you're looking to buy a home for over 2 million in the Beaches and Southside area, you have less competition, so you can dictate the terms a little bit more than if you were at the lower price points. Also, as we go into 2024, it's very important to have an idea of where we think things are going to go. Obviously, it's a crystal ball. Things can constantly change, and what I tell you on this video today may be different than what I tell you on the video 6 months from now. But I can tell you, talking with different lenders, talking with different other real estate professionals, as well as using our knowledge of the market as well, what we do seem to think will happen is we do think rates will come down. The question is how far and when in 2024. And we do believe that prices in this area will continue to rise because there's just not a lot of open area for new developments to occur. And so the majority of homes in the market are pre-existing. And because a lot of sellers still have really good rates on their homes, we're probably not going to see a huge uptick in supply for this area in 2024. Now, if you have any other questions that I may not have gone over in this video, definitely in the description down below is a link to my Calendly where you can schedule time on my calendar for us to meet face-to-face, over Zoom, or even just a phone call to discuss those questions and figure out what you and your family may be looking for here in Jacksonville, specifically the Beaches and Southside in 2024. Also, if you did like this video, again, just give us a like on YouTube for this video, subscribe to our channel, and ring the bell so you get notified when we post more videos like this in the future. That way we can continue posting great content like this for you, our audience. All right, now, until the next time, I'll see you guys again.